Hello and welcome. You are watching First Take here on News 9, where we break down the morning action on the D Street. I am Suyash Maheshwari, and with me in the studio is my friend and colleague Amit Ranjan. Amit, let's begin with how the global markets are doing this morning.
Not too good despite a rally in the tech stocks in the US. Dow Jones closed in the negative 0.16%. Standard & Poor 500 closed again in the negative 0.2%. Nasdaq closed in the negative marginally 0.07%. Coming to the European markets, they are also in the negative, closing 0.34%. Hang Seng is down this morning 0.65%,
Right.
and Nikkei is also down 0.23% as we speak. So the tech rally hasn't really showed on the US stocks at
All
least.
right, so it seems that the global rally in the equity markets is slowing down, at least over the weekend. We have seen, muted returns, and of course on Friday, the US market, Wall Street, was on a holiday on account of Black Friday, and then we came back on Monday morning and we are seeing muted performance. But let's not forget, Amit, the global markets, the Wall Street especially, is on a tremendous streak in November itself. S&P is up somewhere around 9%, Nasdaq has rallied by about 11% or so. But let's look at also the other cues that we have been tracking closely. The dollar index, which measures US dollar against 6 major peers, slipped by 203.37 levels and was headed for the for a monthly loss of more than 3%, which will be its worst performance since November of 2022. Now, crude prices, which have stabilized over the weekend, and Brent crude as we speak is hovering somewhere around the $80 a barrel mark. Now, remember, prices last week tumbled when OPEC Plus postponed its November 30th meeting to iron out differences on production targets for African producers. As we know, now the meet is expected to take place, sometime later this week, and expectation is that it will take place on Thursday, so we'll be closely tracking that. Now, bond yields have slipped off by about 2 basis points since we last spoke and are currently hovering around the 4.38% mark. Gold, meanwhile, has hit a 6-month high with a boost from softer dollar and expectations for a pause in Fed tightening. They are currently hovering above the $2,000 a barrel mark. Coming back to Indian markets opened in the green with the first tick for Nifty coming in at 19,844 mark. We went as high as 19,848, but have seen some sort of correction. We have slipped by about 20 points or so on Nifty, and as you can see on your screen, as of 9:30 a.m. this morning, Nifty 50 was up 0.16% at 19,825. Sensex, on the other hand, which opened above 66,000, did slip below it, but it has reclaimed those levels, and as of 9:30 a.m. this morning, it was at 66,008 levels. Mid-cap 100, which opened above 42,200 for the first time, has given up about 60 points or so, and was seen hovering at around 0.22% higher at 42,141. Now, these levels are, of course, as of 9:30 a.m. The volatility index has seen a sharp spike. India VIX was up 7.8%, almost 8% above the 12 mark. So all in all, the setup is looking positive, but I think one of the things that is concerning for me, Amit, is the volatility index that has perhaps spiked by about 8% or so, and we have a lot of cues to track. And for that, let's also bring on board our first guest, Mr. Santosh Meena, Head of Research at Swastika Investmart. Good morning, Santosh. Thank you for joining us here on First Take.
Yeah, good morning, everyone.
Now, Santosh, in the last couple of weeks, we have seen, Nifty consolidate in a range of about 200 to 250 points or so, and we are clearly hovering around that 19,800 sort of levels. Now, for some, it will be, seen as good consolidation that the market was perhaps hoping for after a 1,000 point rally, but for some, it's time to turn cautious. Which side are you leaning on?
No, actually, I'm on bullish side because yes, Nifty is consolidating with the positive bias. Technically, 19,850, 875 is a resistance area. But I believe we will cross this level. Yes, market is waiting for clarity from exit poll, but I believe near expiry we will break out this level and may see a rally towards 19,990 level. And I believe Bank Nifty can take leadership from here because it bounces back from 200-day moving averages, and FIs are starting buying. So when FIs will come, the major flow will come into banking and financial sector. And you see that short exposure of FIs in index future, this is still at around 77%, and we are heading towards expiry. So either they will roll over their position or they will cover their shorts. So probability is that they will cover their short, and that will lead a short covering rally in the market.
So on both indices, first, which do you expect to outperform? Because we are seeing some sort of a buying interest emerge in the banking pack, where Nifty Bank on the whole in the last two sessions rallied by about 0.8%, whereas Nifty was in the negative, and we have seen a good bit of bounce back from that 20-day simple moving average. Between the two, which which index will outperform, and what are the levels you will be tracking on both indices?
Yes, first I talk about the Bank Nifty. So I said it bounced back from its 200-day moving average around 43,200, 300 level. And now 43,850 is an immediate hurdle, then 44,040. There are multiple hurdles: 44,040, 44,200, 44,400. But I think it will start to outperform, and once it will cross 44,400 level, we can easily see a rally of 1,000, 1,500 points in Bank Nifty. And you have a very small stop loss of 20-day moving average, which is around 43,600. So there is a stop loss of around 200 points, and if it will break out, then you may see a rally of 1,500 points. So there is a favorable risk reward ratio in banking sector. And if I talk about the Nifty, 19,700 is acting as an immediate support level. 19,875 is acting as a resistance. It is a series high. Once it will cross 19,875, we can see a level of 19,990 and 20,200 in coming days.
Now, Santosh, shifting focus from the indices to stocks, one of the stocks I think that everyone is actually keenly eyeing is Paytm. The 197 Communications saw a sharp correction of about 3% on Friday, and since then we have heard the big news of Warren Buffett's Berkshire Hathaway selling its entire stake in the company. And I mean, if you see, the returns have muted in the last 1 month. The stock has given up about 3.5% to 4%. But on the whole, year to date, it's been on a tremendous rally where Paytm has rallied by about 70% or so. So what are the support and resistance levels that you will be tracking for Paytm?
Yes, I believe the level of 865 will act as strong support for this counter, because despite this news, it is holding ground, and generally it is a positive news because the hangover is out, and the free float will increase, so we can expect a increase of weightage in MSCI index in coming days. So the 860, 850 zone will act as strong support area. Once it will cross 920 resistance level, we can expect it may move towards 1,000 mark in coming days.
Good morning, Santosh. I'd like to drive your attention towards another stock which is in the news, and that is Raymond's. It is down almost 2% today itself, 8% in the last 5 days, and another also 8% if you see over the last 1 month. Now, to stem this fall, probably the managing director of Raymond, Mr. Gautam Singhania, has written to the stockholders and the board. And the letter, I'll quote a few sentences from it. As the media is ripe with news about matters pertaining to my personal life, I am writing to you to say that I have chosen not to comment on the same, as maintaining the dignity of my family is paramount to me. He has further added that it is business as usual at Raymond, despite it being a difficult time for him, and that he remains resolute as chairman and managing director and is fully committed towards the smooth functioning of the company and his business. Now, what do you make of Raymond right now? Good time to get in, considering the stock is on a sort of a free fall last 5 days.
And if we are to believe Mr. Singhania, it won't see any effect on the operations.
Yes.
But technical charts are looking weak. I think investors should not jump in a hurry, because there is a clear breakdown of head and shoulder formation, and there is a breakdown of upsloping channel formation as well. So which suggests there is more downside towards at least 1470 I'm expecting. And if it breaks 1470 level, then there we can see further downside in this counter towards 1200 level. So investor or trader should wait for any reversal. Once it will cross 1750 level, then I will believe then that this correction has been ended. Then we can look at buying opportunity. But for timing, you should avoid entering into this counter.
So it's at 1600 right now. You are expecting it to fall to another 200 points to around 1400 levels. You're saying?
Yes, yes. On immediate basis, I'm expecting a target of 1470, 1480, and below 1470, I'm expecting a level of 1200 as well.
Oh,
okay. Okay, Santosh, before we let you go, what are your top 5 picks apart from these?
Yes, my first pick is JSL, Jindal Stainless Steel. Today it is down, but I believe giving an opportunity, you can buy it at current level. You can keep a stop loss of 520. I'm expecting a level of 580. From auto ancillary space, I'm looking Subros industry. You can see out of a channel formation, this counter on Friday's trading session. There was a strong buying momentum with a strong volume. So I'm expecting a level of 460 and stop loss should be 418. Another larger counter is Axis Bank, as I'm bullish on banking and financial counter. Axis Bank is bouncing back from its 100-day moving average, and now it is trading above its 50 and 20-day moving averages. So we can expect a level of 1025, where stop loss should be 999. Another is Lupin. I'm also bullish on pharma space. Lupin is showing a strong bullish momentum. It is moving in an upsloping channel formation. So on immediate basis, 1280 is an immediate target and stop loss should be 1220. My last counter is IRB infrastructure. There's a multi-year breakout and stock is sustaining above that level. So on immediate basis, 14.75 is a target and 38.2 is a stop loss.
right. Axis Bank, JSL, Subros on the buying radar of Mr. Santosh Meena. Sir, thank you for joining us here on First Sig. Appreciate your thoughts.
Thank you.
Thank you.
Now, Amit, moving on, 5 IPOs closed last week, including the much awaited IPO of Tata Technologies, which was the first IPO from Tata Group in nearly 2 decades. What are the likely listing dates, and what do you think, what are you reading about the listing premiums of these issues?
Okay, so the listing is going to be a busy week from starting November 28th. So, and it will go on till around the 5th of December, when I'm just picking on the top 5 companies that we are looking at. IREDA, Indian Renewable Energy Development Agency, that is IREDA, Tata Technologies, as you mentioned, Gandhar Oil Refineries, Flair Writing, and Fedbank Financial Services. All these IPOs recently closed despite being a truncated week.
Let's start with IREDA first.
Yeah, so IREDA, the grey market premium is likely to be 10 rupees. IPO price was 32 rupees. Expected listing gains are 31%. Date of listing is 4th of December. Now, I'll just elaborate on what this GMP, IPO GMP is. It's the full form of grey market premium. Refers to the difference between the IPO issue price and its trading price in the grey market. Now, before an IPO is officially listed, there is a trading that happens unofficially in the grey market, and that has a price. So the GMP is the difference between the issue price and the grey market price.
Right.
Now, it must be noted here, it is important to note here, that this is not always an accurate predictor of what the price is going to be at the listing time, because it does not take into account the institutional investors.
Right.
So these are individual investors who are indulging into this grey market operations. So, but it is quite an indicator of the sentiment of the market.
All right.
So I mentioned about IREDA. I'll go on to Fedbank Financial Services. The issue price was 140. On this, the grey market price has not yet been out. So it is still in the listing of this stock is going to be on the 5th of December also. Gandhar Oil, a big one. IPO price was 169. The grey market price hovers around the 75 rupees mark on this. Expected listing gains are 44%, and this is going to be listed on the 30th of November. Now the big one, Tata Technologies. The IPO price was 500. The Grey market price is 410. So that is the gains that you are looking at. Expected listing gains 82%.
Wow.
It's going to be listed on the 30th of November also. Flare writing, the last of the top 5. IPO price was 304. On this, the gains are expected gains are not too much, 26%. Grey market price is 80 rupees 80.
Right.
And it is this one is expected to be listed on the 30th of November.
I mean, 30% gains are not bad, Amit. Like, by no account, one day gains listing in a
on a comparison.
Of course, definitely, when you are expecting
82%
gains
Tata
for Tata Tech,
Technologies,
26% doesn't seem like
Gandhar
a good
oil
deal.
44%.
Wow.
So yeah, so 22%, 26% does not look so good, but it is good.
And the kind of interest we are seeing in, the primary
markets.
2.6 lakh crore application amount was received for Tata Tech.
Yes.
So retail investors are really getting on that primary market bandwagon.
And all of them have been oversubscribed.
Wow.
So, and these are only the top 5. Then, as you know, the list is a long one.
Right. So these were the main board IPOs, and there are
Yes.
others in this SME segment.
SME
as well.
segment, which it'll take another long episode to look at each one of them.
Exactly. Let's also look at how the markets are doing, Amit. So I'm made to believe Nifty is, as of 10 a.m. is holding above that 19,800 mark. At 10 a.m., Nifty 50 was up 0.13% at 19,820. So on an intraday basis, it seems we are holding above the 19,800 mark, which is a good news for the bulls. So at the day's low, we were at 19,806, so holding firmly above 19,800. Sensex, on the other hand, has slipped by below the 66,000 mark. It's just marginally below that. Mid-cap index is, pretty much hovering around that 40 to 150 mark, whereas small cap indices has, is also holding up just below the 13,900 mark. Now, with that, let's also bring on board Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services. Sir, we have seen a flurry of IPOs, and me and Amit were just talking about, how well they have been received by the street. What are you making of this sort of exuberance that we are seeing in the primary market?
Thank you, Suyash, and morning to all of you all. This only shows that there is ample liquidity in the market, both secondary, primary, and otherwise. I remember those days when even 2 or 3 IPOs used to hit the market with a decent amount of issue size. There used to be a fear that there will be liquidity sucked out of the secondary market and pumped into the primary market. But over the last couple of years, not only about 10 days back or 2 weeks back when these 5 IPOs hit the market, but even before that, there have been instances where a couple of IPOs have hit the market and the secondary market has been intact. And there has been tremendous amount of exuberance in terms of investors' attraction towards this IPO. And those IPOs have got subscribed multiple times. So the fact of the matter is a couple of things. One is that you should have a decent business when you go and hit the street for IPO. Second is your management should be capable enough to take that business forward. Third and the most important thing is the valuation. If you value or if your financial advisors advises you appropriately and if you price the issue at an appropriate level and you leave something on the table for the investors, I'm talking about investors, I'm not talking about grey market or listing guys, listing profit kind of investors. Definitely those IPOs will attract a lot of subscription. So a lot will depend. I mean, we are talking about this couple of weeks back, Hanosa hit the street, valuation was rich, stock got listed marginally at a premium and that was 10% lower circuit and then the stock appreciated because of the fair valuation.
Right.
So you should have these things in mind before you subscribe for the IPO.
Good morning, Gaurang. We took into account just the top 5, Flare Writing, Tata Technologies, Irida, Gandhar Oil and Fedbank. Now, for the investors who are not able to get subscription in the IPO, which of these, according to you, should they look at the time of listing to invest into?
So let me say this. In terms of business and valuation, all 5 of them were fairly priced.
Hmm.
One or two of them were attractively priced. So out of these five, we had two recommendations for the IPO as a subscription note, and that was, of course, Tata Tech and IRIDA. These two, we had come out with a IPO note and we had subscribed recommendation. Now, I don't know at what level the listing is going to be of
Hmm.
these two names. Definitely going by whatever your commentary and assumptions of the grey market prices, Tata Tech would be one of the most attractive in terms of listing gains, and then followed by the rest.
Hmm.
So, leaving those who have missed out or who wanted more number of shares, but given the lot size, if you're not satisfied and if you have appetite for more,
Hmm.
I would only say that let the listing euphoria settle down
Hmm.
and let some sanity come in. Going and buying at listing at a premium of whatever it is on the higher side
Hmm.
may end up, possibly you investing at a higher level. So
Hmm.
let the dust settle down, give it a day or two, and then possibly decide whether you want to invest or not.
Now, Gaurang, given the increased retail participation, SEBI over the weekend also came out and said that they'll perhaps, check the rules for higher valuation or the valuation premiums that these companies are coming out with. What do you make of these comments? Was this the need of the hour to protect the interests of retail investors?
See, Shuyash, the most important aspect about having any kind of regulation is in place is having the investors' interest at paramount
Hmm.
or at pinnacle of everything else. Because if you lose investors' trust, then you lose everything. So I think SEBI, not only now, but SEBI has been doing it over a period of time in terms of regulating, bringing in discipline. We all know what over-the-counter, exchanges do and what kind of stories we heard recently in terms of certain, routing of money or whatever be it.
Hmm.
So my sense is that first of all, it is the obligation and responsibility of the financial advisor to advise the promoters appropriately in terms of fair valuation. If they do their job right, Suyash,
Hmm.
I don't think any other regulator would want to step in. But
Right.
if the regulator finds something amiss,
Hmm.
then they will definitely step in and bring in that kind of regulation to possibly discipline the market and investors having a long-lasting faith
Hmm.
in this asset class as an investment idea.
Now, Gaurang, we have lots of cues this week. The exit polls, state assembly exit polls come out on Thursday, that's November 30th. Results are on December 3, Sunday. Then we have Mr. Powell speaking on Friday as well. We have, OPEC plus production cut decision also coming out on Thursday. So, among all these cues, which is the one that you are closely tracking and perhaps investors should play a close eye to?
And before that, you will have the FNO expiry also,
Oh,
Suyash,
right.
30th
Yes, yes.
Thursday. So you will have choppiness volatility.
Hmm.
We are possibly trading at closer to the higher end of the range that we discussed last week of 19,400, 500 on the lower side,
Hmm.
19,850 on the higher side. So as of now, we are trading closer to that higher range. And even last week, we tried to cross this over 19,875 was the high, if I'm not mistaken, and if I remember right. But we were
Hmm.
not able to sustain. So,
Hmm.
given these events of news flows, one that I would possibly look at is the event on 4th of December with respect to the outcome of the state elections, five state election, because as we all hear, this is a semi-final because
Hmm.
before the big final next year.
Right.
Mr. Powell and OPEC Plus, I
Hmm.
think this will be more of, digested as the news flows come.
Hmm.
But FNO expiry, rollover numbers, and the outcome of five state election, I think I would be keenly watching these news flows.
Now, Gaurang, do you expect any sort of a major correction if there is not continuity in regime? Because this is a Hindi-speaking heartland, so perhaps market will be taking the beat for the general elections, a big one next year.
our unfortunate thing about our democracy is that we have elections 365 days all around the year, somewhere or the other. And we have to react to it. But
Right.
I think if the result is not as per, or if it is absolutely thin in terms of no clear-cut majority coming through, or a coalition kind of a government, maybe market will react knee-jerk the way it has reacted for the other state elections that we've seen this year, and the outcome of that. So we will possibly have a knee-jerk reaction, but I would say that whatever be it, if you get a correction on fallback of any of these news flows and events which are lined up, like always, Shuyash, it's going to be a great opportunity to nibble into some stock-specific ideas from a
Right.
long-term point of view.
Gaurang, on this bulletin, we talk about fresh investors and how giving them advice on how they should start their portfolios. I want to pick your brains on people, say close to my age, who are around touching 50, who have a portfolio of a score or few score of lakhs. Is it time for them to reallocate portfolios, or how is it that they should approach the stock market at this age, the 50 plus age group of people?
So as you grow older, your risk appetite comes down. And if your risk appetite comes down, you need to really introspect, because when you come to equity markets in whichever form, either direct or via mutual fund SIPs or via lump sum investment, you are exposing yourself to a little bit of higher risk, because stock markets is all about high risk, high return. But if you're willing to take that, and if you have that appetite for high risk, first of all, if you don't understand the stock market, don't venture into it directly. Go via mutual fund. I think leave it to the fund manager to decide where he or she wants to invest on your behalf. Second, if you have enough time and if you are willing to do a little bit of in-depth study before you decide where to invest, then I think direct investment is a good option. Not that it is a bad option. But at the same time, you need to be careful about where you're investing. If you ask me sectorially, as of now, given the second earnings backdrop and the growth outlook going forward, I think banking, NBFCs, defense, power generation, power transmission, railway related stocks, autos, cement, and possibly IT as a contra bet. I would pick these 5 or 6 sectors, and my advice to all those 50 plus investors would be, don't venture out into broader markets. Stick to the discipline of first picking up large caps, then selectively moving on to mid caps. Small cap and micro cap is absolutely no.
Gaurang, what about investors who 25 years ago, when they were young, the 50 plus, did put their money into blue chip stocks, which they have been holding on to for over about 20-25 years? Is it time for them to reallocate, or just hold on to it for retirement time?
See, when you bought stocks 20-25 years back, you bought it at a damn cheap or lower valuation. Now, after 20-25 years, if you want to churn that portfolio, remember one thing: whatever you buy, you will be buying at current valuation, which may turn out to be expensive. And unless and until, I say one thing very simple, that if you bought quality stocks, unless and until you need money, stay invested. And those quality stocks, if you really don't need that money, then pass it on to the next generation as a gift, and give them a lesson or an understanding how stock market has created wealth for you, so that they also get attracted towards equity market as a disciplined investor, not as an uninformed trader. So unless you need money, don't liquidate. If you have more to invest, then I think the 5-6 themes sectorially that I have put in front of you should be the preferred destination.
Sir, before we let you go, insurance stocks stole the limelight in Friday straight, and the kind of rally that we have seen in the last 15-20 days, where they have, GIC, LIC and National India Assurance have rallied by about 35 to 40% or so. However, they are still significantly below their respective IPO price, and the valuations are also looking reasonable. So perhaps is this the space that one can look at?
So I'll split into two. One is your life insurance business. One is general non-life. In general non-life, we have a positive coverage on ICICI Lombard. In the life insurance space, we have coverage on all the leading names, starting with LIC, moving on to SBI Life, then going on to HDFC Life, and then ICICI Pru. And we've discussed this particular sector earlier also, Shuas, if I recollect right. And I've always maintained that if you're looking at investment into life insurance related companies, then your time horizon has to be 1.5, 2 year plus, because it will take that kind of time horizon to bring in new insurance premiums, which will increase the run rate. Because now people who are buying insurance, they are buying of a higher sum insured, and by the virtue of that higher sum insured, you and me have to pay higher premiums, which turns out to be a better premium run rate and income for the life insurance companies. So we remain positive on all these names, provided you have 1.5, 2 year plus kind of a time horizon.
Words of wisdom coming from Mr. Gaurang Shah. Sir, always a pleasure speaking to you. Thank you for joining us here on First Sec.
Thank you so much. God bless.
Now, Amit, before we wrap things up, let's also look at how the markets are holding up. And as I'm made to believe, the Nifty is showing strength above that 19,800 mark, and we are holding that on an intraday basis so far. And as of 10:10 a.m., as you can see on your screen, Nifty was up 0.08% at 19,810 mark, whereas Sensex has slipped into the negative below the 66,000 and it's currently near its day's low. The mid-cap index has also given up around 150 points from the day's high, and as of 10:10 a.m. this morning, it was up 0.15%, holding above the 42,100 mark. Nifty small cap 100, which by the way reclaimed the 13,900 levels for the first time in nearly a week, is facing resistance at 13,900, and as of 10:10 a.m. it was up 0.31% at 13,869. The volatility index, which by the way was up almost 8%, has seen some moderation. India VIX is still 5.5% higher and has slipped below the 12 mark, and these are the numbers as of 10:10 a.m. this morning. But with that, we have completely run out of time on this edition of First Sec. Keep watching News 9.
Hamas attacks Israel.